On the heels of last month's record-size silver import volume into India of over 70 million ounces for February 2024 alone, this week we saw record-sized capital inflows into one of the world's largest unsecured silver ETFs, with alleged 1,000-ounce bar movements being moved into London. An approximate $750 million fiat dollar inflow, or more succinctly an additional over 29 million ounce inflow into SIVR Silver ETF. This physical inflow occurred in the Loco London vault system, and thus the trading was likely private between parties, possibly not even affecting silver spot price markets. But let's put this reported over 309 metric ton inflow of 1,000 ounce silver bars into size perspective, shall we? What you see here are 15 metric tons of silver bullion piled on wooden crates. The alleged physical flow into SIVR over the last 2 weeks amounts to more than 60 times this amount. Another way to put this few-week movement into perspective is comparing it to the relatively tiny U.S. Mint American Silver Eagle Bullion Coin Program. The U.S. Mint has not produced nor sold over 29 million ounces of their flagship silver bullion product since COVID 2020. Hopefully that gives you perspective of why we're leading this week's bullion market update with that breaking data. In a world that seems hell-bent on using up all available fine silver inventories, thanks to continually large demand outstripping new line supply, creating massive amounts of physical deficits, some combined over 100 million ounce record-sized physical silver flows occurring over the last weeks and months will likely help that 2024 forecast come in understated. As China continues paying international silver spot prices plus a local plus 8% premium this past week for industrial-sized 1,000 ounce silver bullion bars, reports continue being published that China's silver solar demand is going to stay robust through 2033, as a projected tripling of their already world-leading solar capacity remains a commonly cited forecast. On the unsecured gold ETF fund flow side of the Western world equation, we have finally begun seeing some capital inflows that nearly match levels last seen at the quieting down of the last near U.S. bank crisis during late winter, early spring last year, 2023. Apparently, gold popping intra-week to 2,222 an ounce in fiat US dollars is attracting momentum capital inflows into the unsecured Western gold ETF complex. Yet I still don't think that the market has fully realized yet that it's staring straight down the barrel of a potential decades-coming secular bear market in long-term government bonds. The chart on the left measures long-term bonds versus gold starting at a parity a year before COVID, March 2019. Any wonder why government central banks have been collectively buying gold bullion over bonds in record size the last 2 years? But wait, you might wonder, staring at the chart on the right-hand side, what is up with the red net central bank gold bullion reserve sale bars during the 1990s into the 2000s? Well, here's a trip down hubris memory lane. You might have heard about the United Kingdom's Gordon Brown's bottom, when the then former empire sold about half its official gold reserves at some of the lowest gold prices on record over the last 45 years? Proper. Stare longer at this chart and you'll likely laugh at so-called safe haven Switzerland selling well over 1,000 metric tons of gold bullion into the market right before the 2008 financial crisis slapped them in their collective faces. Almost all this net central bank gold selling occurred while the spot gold price ran more than sevenfold in nominal fiat US dollar terms, from nearly 250 an ounce in early 2001 into the 1900s by August 2011. That same time span was also the last major secular bear market for the fiat US dollar. You see, the current fiat US dollar's relative strength versus other major fiat currencies remains a likely linchpin for the coming gold bullion bull market mania to come. Since late 2015, even in the face of relative fiat US dollar strength, the spot price of gold has more than doubled in nominal terms. So what happens with gold during the next major secular bear market in the fiat US dollar? Central banks collectively are obviously front-running this question. In short, prepare to see this long-term gold price chart add another stair-step to its rising nominal price as time unfolds. Stick around. After this short break, we'll examine what happened to a critical precious metal spot price the last time the market collectively raided its warehouses and unsecured ETFs for any remaining physical bullion inventories it could grab. We'll also examine why now buying gold over U.S. stocks is akin to doing similar back when President Nixon defaulted on the U.S. monetary agreements and went full fiat currency buffoonery. And finally, we'll look at just how coiled the silver price chart is becoming before the next bull run to come. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. Subscribe to our official YouTube channel here for weekly bullion market updates. And don't forget to sign up below for your chance to win 500 Tree of Life silver bullion coins.
Want to win 500 Silver Tree of Life coins from SD Bullion? Enter and you could be the next lucky receiver of a phone call like this.
Hello.
Hi, Stuart. This is Dr. Tyler Wall, President and founder of SD Bullion. And I'm calling you to let you know that you won the SD Bullion giveaway of a monster box of 2023 Silver Eagles.
Oh, my God. You got to tell my wife this, because she's not going to believe it. Honey? Okay, doctor, let her know.
Yeah, this is Dr. Tyler Wall. I just let you know that you guys won the monster box of 2023 Silver Eagles giveaway from SD Bullion.
No way.
Yeah.
She would never believe me if I told her that. I'm online all day long with your website looking for deals.
Wow, that's awesome.
Yeah, your site's fabulous and your company's fabulous.
Well, I appreciate that feedback. And we'll be following up with you shortly on getting your monster box shipped to you. Congratulations again.
Thank you, doctor.
So click the link below because the next big winner could be you.
The spot gold price closed over $2,150 an ounce bid, completing its 18th week, hovering above the building 2,000 an ounce price support threshold. The spot silver price made a brief run at 26 an ounce, only to get slapped down, closing just below 25 an ounce spot for the week. The spot gold silver ratio climbed on gold strength to 87.5. Over the last more than 3 years, we've seen net outflows of gold and silver bullion, both underlying COMEX warehouses and unsecured ETFs in the West. I went and looked back at palladium today just to examine key year and time frames for that particular industrial precious metal, often used in auto catalysts and manufacturing. During the 2000 into the mid-2010s, NYMEX palladium warehouses were raided, and then after that was nearly complete, the raid switched over to unsecured palladium ETF piles underlying. You can see the key date of 2016, marking then the palladium ETFs on the right-hand side, and they're beginning to be raided in earnest at the time. And not coincidentally, to start 2016, back during the JP Morgan precious metal RICO price rigging era, we see a crash in palladium spot prices coinciding with the palladium ETF raid at the time. What followed was the palladium spot price more than six-folding, starting from the 2016 trough to the early 2022 peak of over 3,000 an ounce. Now keep this recent palladium price and raid history in mind when we start slamming into physical silver and gold bullion shortage supply shocks in the coming years. Moving on to investors wise enough to take gains from the U.S. stock market and roll them over into bullion. Those doing so now are doing so at similar levels, cascading from back when President Nixon declared the full fiat currency era temporary in August 1971. Now, some 53 years later, buying gold over U.S. stocks seems to be the better long-term value, as eventual parity in the S&P 500 versus gold seems again inevitable. And potentially, even the cherry-picked Dow Jones Industrial Average reaching potential one-to-one parity with gold is not out of the question for our futures. Finally, a look at the yearly spot silver price in fiat US dollar terms over this full fiat currency era, focusing on the last 4 years of coiling and triangulating spot price action. Technically, when silver does this kind of trading pattern, it's often followed by major moves. Lower highs and lower lows year after year suggest we are inching closer each week that passes to silver moving beyond 26, then 30, then eventually the final nearly now ancient 1980 record nominal price high boss of 50 an ounce, perhaps a few years still away. You can see similar triangular patterns silver created during its 1970s to the 1980 38 multiple fold in price action. We started this 21st century version in early 2001 with silver spot price low near 4 an ounce. The larger eventual to be discussed question, once 50 an ounce is in silver's range again, well, it becomes where might silver spike to once it gets launched off this coiling path it's currently building. Increasingly rigged CPI data from its 1980 high is a potential clue. Ultimately, the nominal price high euphoria The number won't matter as much as the increased goods, services, and competing asset classes your silver bullion positions will buy later on. That's going to be all for this weekly SD Bullion Market Update. As always, to you out there, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.